Welcome everyone to the show. Joining us today is Deedy from Menlo Ventures, and we're going to be talking about the talent wars in Silicon Valley, what they mean for founders, investors, employees, etc. Deedy, welcome to the show.
Thank you for having me. It's a pleasure to be here.
Let's start big picture, Deedy. How would you characterize the AI talent and hiring environment overall, and what really stands out to you?
Yeah, I mean, the obviously there's a lot of news about Meta and the big offers right now, but this is really a problem or something we saw in late 2022. Ever since the ChatGPT moment sort of happened, we knew there was a shortage of AI talent or people who knew how to actually have the tacit knowledge of training and making great models. And then already back in the day, you would see, OpenAI, Anthropic were companies that you just couldn't compete with on a comp basis. Many startups and big tech companies were losing talent to these companies, and they were sort of the two big names in a way I've almost never seen before in the last 15 years, at least, that I've been closely following the Valley. And, that's when the sort of ballpark numbers, if you count equity and cash together, were touching like the low seven figures. Now, I think fast forward, 2.5 years, and we're at this point where people know the prize that we're actually chasing after. Back in the day, it was really cool to have good AI, but we didn't know what the economic reward really was. But if you look at, OpenAI's rumored revenue or Anthropic's rumored revenue, OpenAI is at touching 10 billion in annualized run rate. Anthropic has a rumor that that's touching 4 billion in annualized run rate. So Google's also inflecting in a big way on their AI business. So, people are waking up and realizing actually the prize here is massive. And maybe it makes sense to just hire people at massive cost to justify the reward. And to me, it's pretty much as simple as that. And we just are now realizing and waking up to how big that prize really is.
Yeah, it's clear the prize is massive now, and there also seem to be pretty creative ways where companies are trying to get that talent to ultimately land on that prize. So one recent example was the agentic AI company Windsurf. They made headlines for kind of this three-part deal twist. It turned down a $3 billion acquisition from OpenAI, then had its CEO and core team hired by Google DeepMind, and then ultimately the company and its assets were acquired by Cognition. So a lot of things going on there. How would you summarize what's going on in the situation? Really what that says about how exits are maybe a little bit more fragmented now, how companies are thinking about AI talent and IP. What does this deal really tell us about the big picture?
This is an interesting one because Windsurf is a fantastic company, and Codium has been around for about 2 years. Maybe I'm getting the numbers wrong, maybe a little bit more, but wasn't really looked to as sort of an AI native team. I mean, they did have a model release, which was a fine tune of an open source model, but these are perhaps not people who have trained models from scratch, so to speak. So I do characterize it as slightly different from the meta hires from OpenAI. In the Windsurf case, I can only speculate here, but it's almost like, hey, we would actually like the builders who are at the cutting edge of this, who understand how users are using this, and have that sort of, it's a different kind of tacit knowledge. It's almost like, how do you build products quickly in this space? Can we just hire a team and bootstrap that instead of trying to organize the chaos within Google and the upsetting a bunch of people in different organizations to try to assemble our own? It may just be cheaper, even at a crazy $2.5 billion price, to get a team in that knows how to build and, pretty importantly, knows how to sell this product and get them to do it within Google. And it, seems like a good exit from Varun's standpoint at Windsurf. It seems like a reasonable idea for Google, although it still seems fairly expensive. And so, we'll see how it plays out. But I imagine they're going to be running their own sort of little division within Google to continue doing similar things to what Windsurf is doing. So agentic coding broadly.
Aside from the economics, from the price tag of any of these acquisitions, acquihires, whatever you want to call it, do you think this approach in a way helps to avoid M&A scrutiny? Because we know there's been a lot of issues and focus by the FTC, for example, in antitrust cases. So yeah, is this a way to maybe circumvent regulatory concerns?
That is what people are saying. I don't know the actual details of when and how M&A scrutiny would work in cases like these and what would alert, the FTC. But sort of the joke is Lena Khan wakes up and then you don't do acquisitions anymore. And so maybe it is a way to get deals done quicker. Maybe it's a way to avoid scrutiny. These are all possibilities. And again, of course, we talked about the Windsurf one. We know about the Meta one, but Character AI was sort of the first version of this that we saw, which is getting Noam back to the Google team in a weird sort of acquisition as well. And then there was Mustafa's company at Microsoft where a similar thing happened as well. So we are seeing a bunch of this in AI land where, it's like you don't have the capital and the resources to scale your business, but I can value it at a really high amount, and then I might pour in the capital and resources to use your talents to scale the business within our org.
How do you think about this from the venture investor perspective? Because maybe the path to an exit is not so traditional anymore. And how are you considering this when you're analyzing deals internally?
It's actually super complicated in the sense that when you're taught the sort of art of venture, the sort of things you look for in a deal are very grounded in the traditional exit path. So you're looking for, hey, is there a big TAM here? Is this scalable? Does this team have a unique right to win? All of these sorts of things make a lot of sense when your primary exit modality is an IPO. Now, if you twist turn the tables here and say, it turns out a very common exit modality is just an acquisition of a growing business, then all of a sudden you start to think of this in slightly different ways where you care a lot more about the talent you're investing in. It's like, is this a team that is capable of delivering something unique here, whether or not we see competition, whether or not we see this as a, perhaps a unit economics positive business, whether or not we see this as a long-term scalable business, whether or not we see competition. All of those things are taking a bit more of a backseat to, hey, is this a AI native team and can they execute in this world that we know now? That's becoming so common because we can almost underwrite the deal by saying, look, someone will buy them. And we don't know exactly what it means, or no one ever knows what exactly you need in a team to be acquirable. There's a lot of factors and a lot of exceptions, and every case is a little bit different. But the team has just mattered more than ever today than before. Because there are some teams that are perfectly okay at executing, but they're not acquirable teams in that same traditional sense.
Yeah, I guess now that the team, the talent is of even more focus to you guys, how do you protect against the scenario where you do lose a founding team member to some other larger company that has poached them, maybe leaving the company itself behind, your investment behind? Are there any aspects of the deals that you're putting in place to protect against that?
It's always a negotiation when it comes to the fine print of a term sheet. We would love to ask for it. The reality is that it is a negotiation. Oftentimes, there are multiple venture firms at the table who may be willing to be more lax on some of those terms in order to win the deal. So often we can't afford to be prescriptive for the best teams. We would love the best terms for us as well. I mean, it makes sense. We want a win-win situation for both. We don't always get that. But at the same time, what's really interesting about a lot of these deal structures is, you also have to protect against just OpenAI and Anthropic or Facebook or Google going and getting the talent out one by one. And that is a little bit tougher to protect against. It really ends up being a cultural thing at the end of the day. It's hard to give a rational reason for somebody to turn down an offer at, call it $10 million plus a year, to work at a startup. I mean, no rational human being would do that. I mean, even in the best case of your startup, it's unlikely that you will see that kind of economic reward. So often we're looking for people who are just motivated by something more than that, and that is, increasingly hard to find.
Yeah, I
Although I
mean,
will lastly say one thing, which is at least in the windsurf case, the story is that the investors did get paid out fairly handsomely. It is not the case in every single deal structure, though.
on the topic of sort of losing talent potentially one by one, you mentioned and alluded to some of these larger deals like Meta reportedly offering $100 million plus signing bonuses and investing $14 billion in Scale AI while hiring its CEO. These really large compensation packages. Do you think this is sustainable? Is this going to continue for a while, or do you think this is a symptom of a short term, I don't want to say AI hype, but a short term need to grow quickly and nail down the right talent at this current juncture?
I think if you look at the history of how this has played out in the Valley, it's not really ever played out this way because there was very rarely some tacit knowledge that lied in very few people's minds that had such a high economic stakes. However, usually the way these things happen is as long as there is belief that there is more to do in this space, there will be a war for the talent. When the belief stops that, hey, we are sort of plateauing on how good models are, we are plateauing on we're saturating the TAM here of what we can actually, of the revenue that is to be made in this market, then we will probably see a cooling of these salaries. It will mean less for people to compete. It will be more of a zero-sum game, people eating into each other's demand. But so long as there is belief that we're only scratching the surface of a really big shift in the way technology and software works, then yeah, I mean, it is still they are still very much going to be in demand, and I do anticipate this to continue happening. And the last thing I'll say is there's a talent layer, and there's also, speaking of, maybe even the product layer, where if you start a company, often we see, if you look at, say, Cursor, for example, very rarely have we seen startups just inflect from 0 to 500 million of ARR in such a short period of time. And often companies are too big tech companies are too big to ever see that for a variety of pretty systemic reasons. It's very rare that they release a new product that sees that kind of growth. So when the prize is there, they might just acquire those teams too. So there's both the talent acquisition and the fast-growing novel product acquisition that we see, and I anticipate to continue seeing until we believe that there's no more sort of juice to be squeezed, if you will.
You had posted recently some broader trends where tech hiring is down 25%, but new hire incentives are skyrocketing. Do you think we're entering this phase where it is just the top, say, 0.1% of engineers and AI talent who are getting these big pay packages while everyone else gets squeezed? Maybe there's fewer actual roles to fill overall, or not enough money to go around to some of these mid or lower tier engineers.
I think that's broadly accurate. At the very high end, of course, we see these kinds of pay packages. Obviously, we talk about the Meta ones, but even if you look into, early engineers at Anthropic and OpenAI have also probably made a sizable sum of money. But then on the other side, we're also seeing, I don't think AI is the primary driver of this, although it is a driver. AI and then just the lack of software demand compared to the number of people graduating from new CS programs is at an all-time high. Just somewhat expected, given, if you look back at, the big tech companies and their headcount of engineers from, call it, 2010 to 2024 or 3, headcount and revenue sort of always grew in unison for these companies. And it was sort of the back of the envelope math. It's just like, if our revenue keeps growing 20%, we should hire 20% more engineers. And this is why, everybody wanted to major in CS. CS has become the dominant major in undergrads for a long period of time. It became the path to get a really good job out of college. And now you all of a sudden have a ton of CS majors in college who are just about to graduate, but these big tech companies are like, you know what, like maybe let's slow down hiring. I think we're good. I think we need to pause and hire less. We're just not trying to hire as much as we were before. And that's really one of the primary drivers of fewer entry level jobs. And much less so at the startup. If you talk to a lot of startups, for them, this has always sort of been the case where when you are a small business, you can't afford to sort of hire new grads and train them when you're sub 50 people. You would much rather prefer to hire people who kind of know what the job entails. Maybe when the business starts working, you're at 50 to 100 people scale. You're like, okay, now it's time to get our first batch of new grads in. We kind of have the extra bandwidth to train them. And so I think it's a lesser effect than the general big tech cooling on hiring. But if you combine that with the big salaries, then the ultimate result is there's a huge shift to the right. A lot of people making a lot of money, fewer people getting jobs at all. So the inequality is at a place I've never seen it before.
Before we let you go, I do want to get your take on Apple, because it, at least for now, appears to be a little bit behind on the AI front. And obviously it has money to spend and potentially these large pay packages in the same way that Meta, Google, et cetera, are doing. What is your overall take on where Apple stands as far as AI and what you might expect to see?
You know, what's interesting about Apple is I think, okay, Google, it makes a ton of sense for them to invest in AI because, well, A, they're just known as a software behemoth at the cutting edge of software. So just for the branding thing, they always want to be on top of it. But two, they have this like cloud business. So it makes sense there is a business case to be made in the AI world. You could argue similarly for Amazon and Microsoft that all have huge cloud businesses. When it comes to Meta, the best case argument is we think that AI will make our products a lot better. We're not a cloud business. That's not how we would make money. So I would say it's partially, hey, let's make our products better, and partially, we want to be seen as on the cutting edge of software. I do think Apple takes a slightly different view to a lot of these things. Apple generally falls less prey to, call it hype cycles, call it something else. But for them, it's like, okay, what are we going to do here? I mean, typically the main use case on Apple's side is Siri. Siri is the main way they would make their products better. And if you go look at their job postings, I actually did this a couple of days ago, they are hiring for AI talent on Siri. They are very much trying to get LLMs into Siri. But in classic Apple style, they probably won't pay a lot of money for it. They are not going to pay exorbitant amounts of money for it. And they will take their own sweet time and let things settle down because they don't think them being late to the game upsets their monopoly. I mean, they can take their own sweet time and ship it in Siri whenever they want. Siri's not going anywhere, and they control the platform. So if even they let an OpenAI or Anthropic in, they're not going to be an OS level voice assistant. So they kind of do control what happens and when. So that's my best explanation as to why they don't care as urgently. I don't think this is as much of a higher level business conversation. They really are focusing a lot more on hardware, which is their core competency. So let's get the hardware so we can run models on edge. Let's get the hardware so bigger and bigger models can be quite performant on device, and then you don't even need to make any revenue on it. It just runs on device, and we can support that and make that back Siri. So I think they're playing the longer game here. I don't think they care about this business, so to speak. It's not their forte, but they will eventually get there and ship a good Siri, hopefully.
Mm-hmm. Yeah, Apple usually knows what it's doing. All right, we will leave things there. Deedy Das is from Menlo Ventures. Thanks again for joining us.
Thank you so much for having me, Nora.